Hello, Self-Made Millionaires Academy family. Today, we're going on an immersive journey into the dynamic realm of crypto regulations. As the landscape of legislation continually evolves, it is critical for us to understand these changes. We're embarking on a detailed exploration of the future of the crypto world and what these shifting sands could mean for you as an investor. Recently, key political figures gathered in a much-anticipated hearing to address the multifaceted, yet undeniably pressing topic of cryptocurrency regulations. We've meticulously gathered the highlights and critical insights from this transformative discussion to help you navigate these choppy waters. We'll delve deep into the intricate details of this recent meeting, understand the major points raised, and how these could potentially reshape the landscape of cryptocurrencies. Our journey begins with Representative Bill Huizenga. A staunch crypto enthusiast, Huizenga underscored his concern about the potential threats posed by illicit activities within the crypto sphere. He emphasized the imperative need for each crypto wallet to be tethered to a government-issued digital ID, suggesting this as the sole viable solution to put a stop to illegal activities. This proposal elicited a wave of interest, and why wouldn't it? Especially due to the stark absence of any viable alternatives that were discussed. We find ourselves in the throes of a rapidly advancing digital age, and the question lingers, is it possible to curb crypto crime without resorting to a government-issued digital ID? Regrettably, during this meeting, the issue was left hanging, unanswered. Our next stop involves a particularly enlightening exchange with Nikki Baginski, who posited that her constituents demonstrated a lukewarm interest in crypto regulations. She proposed a thought-provoking question: how can we render these complex discussions relatable to the average person? The witness's response left much to be desired. However, Timothy stepped up, attempting to bridge this chasm by arguing that crypto becomes a fiery topic of debate during bull markets due to the fear of missing out, FOMO. He underscored the importance of erecting regulatory frameworks well in advance to safeguard investors. Contrastingly, Frank Lucas focused on questioning the ramifications of the EU's recent crypto regulations on the United States. Marco, from the popular platform Kraken, divulged that the company had been rather reticent about expanding its US operations, opting to invest heavily instead in the EU and UK. This revelation could potentially spell ominous news for the US, leading us to question, is the US lagging behind in the global crypto race? Maxine Waters concentrated on the risks associated with stablecoins, drawing parallels with money market funds. Given the ongoing US debt ceiling debate, her input on this topic was particularly timely. Could potential turbulence within money market funds trigger a domino effect, causing ripple effects on cryptocurrencies such as Tether? Then came a question from Brian Stale that prompted Andrew to underscore the global nature of crypto regulations. While acknowledging the considerable influence of the EU, he pointed out Dubai and Singapore as other noteworthy jurisdictions spearheading regulatory developments in crypto. As we leap forward in time, Don Davis posed a question to Marco about the diverse applications of crypto, where Marco cleverly referred to LivePeer, a project that transcodes video, eliciting laughter from the audience. Shortly after, William Timmons inquired about the possibility of a securities exchange listing Bitcoin, BTC. This question held significant implications since classifying BTC as a commodity effectively means that only dedicated crypto exchanges, and not regular ones, can list it. Next, we heard a heated exchange from Sean Caston, who referenced a BIS report, revealing that 80% of crypto investors incurred losses. He openly challenged Marco's assertions about Kraken and critically examined the industry's inclination towards the Commodity Futures Trading Commission, CFTC. Caston's critique stemmed from a seemingly pervasive industry sentiment that the CFTC might prove to be a more favorable regulator than the Securities and Exchange Commission, SEC. In addition to the primary concerns about regulation and investor protection, the hearing also included discussions on the environmental impact of cryptocurrencies. Despite being a crucial element of the crypto debate, this aspect was unfortunately largely unaddressed. However, the mere silence surrounding this issue served as a poignant reminder of the breadth and depth of conversations necessary around cryptocurrencies. Richie Torres utilized his speaking time to inquire from Timothy about the variety of assets within the crypto world. His question revealed some prevailing confusion about whether an asset can simultaneously be classified as a commodity and a security. As the discussion unfolded, Aaron Hawkins' query led Marco to opine that the US should consider following the EU's approach to crypto regulations. As we conclude our journey through the labyrinth of this hearing, one theme emerges unmistakably: pro-crypto jurisdictions like the EU, UK, and Hong Kong are shaping the global crypto markets, posing questions about the United States' position and future regulatory strategies. Jonathan Jackson expressed apprehension over these pro-crypto regulations in overseas jurisdictions. Andrew's response included a foreboding prediction: If Jackson found the EU's markets in crypto assets regulations worrisome, the forthcoming regulations from the UK would undoubtedly terrify him. This captivating disclosure hinted at the favorable stance of the UK's impending regulations towards crypto. Andrew's conjecture might be indicative of the UK's finalised crypto regulations being as welcoming as their initial drafts. Interestingly, during this crypto-focused hearing, we also witnessed anti-crypto outbursts, courtesy of Al Green and Brad Sherman. Sherman's tirade unveiled a crucial insight, that the balance of power and money is tilting towards the pro-crypto side, suggesting that lobbying efforts from crypto projects and companies could be bearing fruit. So, what do all these developments signify for the crypto market? Politicians from both sides of the political aisle are increasingly taking crypto regulations seriously. They comprehend that their political future might hinge on a favorable stance towards crypto. However, it's likely that we won't see any significant US crypto regulations until after the next election. As of now, the projection suggests that the initial draft of US regulations could be ready by the year-end. Influenced by jurisdictions like the EU and the UK, the US could be moving towards implementing clear crypto-specific regulations. Such a move would undoubtedly reassure crypto projects and companies, making them more comfortable operating within the US. However, it's essential to remember that a majority of constituents currently remain uninterested in crypto. This apathy could quickly shift when the crypto market rallies again, and America feels the rush of FOMO. As Hong Kong's crypto rules take effect on the 1st of June, the timing and scale of their impact remain to be seen. It could take weeks or even months for investors to start reallocating funds, for price momentum to build, and for new exchanges to establish their presence. Despite these uncertainties, Hong Kong's proactive approach towards crypto regulation is a promising development. To sum up, the upcoming months are crucial for the crypto market and US regulations. If the US can successfully mirror the successes of pro-crypto jurisdictions overseas, the ensuing crypto bull run could be unprecedented. So, let's stay tuned and navigate these exciting developments together. That's all for today, Self-Made Millionaires Academy. If you found this information valuable, don't forget to smash that like button and drop your comments. Ensure you're subscribed and have hit the notification bell, so you never miss an update from us. Spread the knowledge by sharing this video with your crypto-inclined friends and family to ensure they remain informed and engaged as well. Turning our attention back to the regulatory environment, we can see that the landscape remains fluid and somewhat nebulous. But one thing is clear, as we step further into the digital age, the importance of comprehending and adjusting to these changes becomes more critical than ever. In a world that is rapidly shifting towards digital currencies, staying informed can be the difference between success and failure. Furthermore, we need to understand that the scope of cryptocurrency and its potential uses extend far beyond investment and profit. With the advancements in blockchain technology, cryptocurrency has the potential to revolutionize industries across the board, from healthcare and supply chain to entertainment and real estate. Understanding this facet of cryptocurrency can help us better comprehend the importance of sound, balanced, and fair regulations. We need to consider the impact of regulations on innovation and progress. While it's essential to protect investors and mitigate illicit activities, we should also be cautious not to stifle innovation. The US, for instance, needs to strike a balance between protecting its investors and fostering a conducive environment for blockchain and crypto innovation. Overly stringent regulations can drive entrepreneurs and investors towards more crypto-friendly jurisdictions, which could mean a significant loss for the US in terms of innovation and progress. The narrative around cryptocurrency needs to change. From being seen as a high-risk, volatile investment option, it needs to be recognized for what it truly is, a technological breakthrough that has the potential to reshape the world. And for this, everyone, from the regulators to the investors, plays a crucial role. Regulators need to comprehend the transformative potential of cryptocurrencies and the underlying blockchain technology to craft regulations that foster growth while mitigating risks. On the other hand, investors, especially those who are new to the space, need to educate themselves about the technology, its potential uses, and the associated risks to make informed decisions. At the Self-Made Millionaires Academy, we strive to keep you updated on these significant happenings in the crypto world. Our aim is to empower you with the knowledge to navigate these exciting yet sometimes confusing waters successfully. In the coming weeks, we'll be closely following the legislative developments and their impacts on the crypto markets. We'll continue to dissect complex topics and translate them into digestible and relatable content for our audience. As we wrap up, we urge you to keep your eyes open, your mind curious, and your investments informed. As the Chinese proverb goes, the best time to plant a tree was 20 years ago. The second best time is now. So, if you haven't already, now might be the time to take a deep dive into the world of cryptocurrencies and explore its immense potential. That wraps up our exploration for today, Self-Made Millionaires Academy family. We hope you found this discussion insightful and informative. If you did, please give us a thumbs up and let us know your thoughts in the comments section below. Remember, learning never stops.